Hello and welcome. I'm Pooja Sarkar, and you're watching Capital Ideas, our latest podcast from Forbes India, where we speak to leaders in the world of business, economics, and finance. Now we're running up to the budget; it's just 3 or 4 days away, and I thought, who better than speaking to somebody who's a market maven and who understands markets, financial services, who's created this behemoth called Edelweiss. We have with us Mr. Rashesh Shah. He's the chairman and obviously the co-founder of Edelweiss Group. Thank you so much, Mr. Shah, for being on our show today.
Hi Pooja, great to be here. Thank you.
Thanks, sir. And I will just quickly start with the question that it has been one of the most unprecedented year. In fact, if I was just going through some numbers, and it says that in 1907, India's GDP had contracted by 5%, and in 1918, India's GDP had contracted by around 10%. These are the years when India had seen a pandemic before, and obviously, this last year we have seen a pandemic, and we also saw a GDP contract. Now, my question to you is that there is always an effect of pandemic, but how are we going to grow from here?
So obviously, I think pandemic was what the economists call an external shock or an unexpected event, and I do believe that in our lives, in our career, this will be one of the defining years because nobody would have expected. Even last year in February, when I read about places in China getting completely locked down and people not allowed out of their house, I thought how unusual it is. Can this ever happen? And it happened, and I think and it didn't happen in one country; it happened all over the world. So I think it was a crazy year. The good news is we all lived through it, and I think given the fear we had, given the panic that was there, I think the actual outcome has been a lot more handleable. It has created damage, I think, in a way, and it's been a year where economy has slowed down, people have lost jobs, people have died, all that has happened, but it's not as bad as it could have been. And at the same time, as you said, we are at a stage where we have to be looking forward. I think this pandemic or 2020 is also a turning point in India's economy, and we can talk about it as we go along. But I think it is a long term turning point for the Indian economy. And the last time I saw something like this was 1991, when India had a big economic crisis with a balance of payment crisis, and there was all chaos all around. But the new Indian economy was actually born out of 1991, and I do think that 2020 will end up becoming a defining year for the Indian economy also, and a really turning point. So I remain optimistic, and mainly because the way last 4 5 months have been until August. I think from March to August there was phase one. There was a lot of panic, a lot of uncertainty, a lot of fear, apprehension. We all had that. I had that. Even I would not have thought that things would have bounced back so well. But since end of August, I think September, then October, November, December, January, we have seen a significant comeback on the economy, and the basic resilience of the Indian economy has been underlined in this phase. And I think given that a lot of things are happening, we are seeing a rebound that is being actually a lot more fundamental than just coming out of COVID. So COVID was like a catalyst for ending what I call a long-term decline of Indian economy. Last 8 years, we've been experiencing degrowth, slowdown of growth in some form or the other. But I think this was like COVID was like the final nail on that downturn, and we have now bounced back. And from all indicators, it looks like this is a structural upturn in the economy which can last for the next few years.
So when we talk about the Indian economy, rural economy plays a very important part in the once the COVID, I mean the first quarter. After the first quarter, Hero Honda came and said they have done very good numbers in terms of sales in rural. I just wanted to understand. Even recently, there was an Oxfam report that came out which said that richer became richer during the pandemic and poor became poorer. Where do you see this growth to come from, and also how is rural behaving at this point in time?
Actually, the effect of the pandemic was mainly in urban India, where populations were more dense and people lived close by, and there was a need for public transport, and people had to use that. I think that is where the impact of the COVID on the economy was the highest. I think in the rural area, a large part of India was fairly insulated, and the rural economy continued the way it was. So you are absolutely right. I think the large part of rural India was insulated from the impact of COVID. Even now, you hear stories where people go to even smaller towns and villages. There is no COVID kind of a situation. A lot of COVID was in the metros and the urban cities, and the impact of COVID on the economy was in the metros and the urban cities and all. So that is part one. The other, as you said, the Oxfam report said the rich have got richer and all. Because what has happened is one of the first response to COVID has been through the monetary policy, through loosening liquidity, pumping in a lot of money, which has started for about, from 2008 onwards, what is called quantitative easing. Because any regulator, any government's first response to any crisis is to loosen the money supply, and that's the right one. You need to keep liquidity very loose when there is a crisis. We did that in 2008 onwards. We are doing it now, and that is helps because that allows the crisis to at least get manageable. But a monetary policy always helps the formal formal sector of the economy. It always helps the haves because the way the monetary policy works, it goes from RBI to the banks and then to the formal sector. So the upper end, the AAA rated companies, the good quality corporates, the formal companies, they do benefit from them. It is usually the fiscal policy, and same thing happened in the US. The government, when the US government have started sending checks of $600 a week to individuals, is where their spending power came in. So the government action, the fiscal policy as we call it, always impacts the lower and the middle class, while the monetary policy always benefits the upper class. And that's all over the world. That doesn't mean we don't need monetary policy loosening. We need monetary policy loosening, but that needs to be followed by a loosening of the fiscal policy, especially government spending. But government spending can also be in two ways. I think one is government investing money, and the other is government putting cash in the hands of people. I think in the current situation, the more important one is going to be for government to put cash in the hands of people, either by cutting tax for the arm army, by reducing GST, by even direct benefit transfer. But we need to put more cash in the hands of people so that the economic momentum continues as we go forward.
True. I was just going to come to that question, that there is very little window that the government has in terms of expenditure. So what is it that you know what would you think is the right thing to do for the government? And as you said, that cash is something that they need to put out to people. But going to the next part of the question is that fiscal deficit, which has been a cause of concern for last 2 3 years. We've always been missing the targets. Obviously, last year the government said they would maintain 3.5 for 2020, but it is not possible. Where do you think our fiscal deficit would be, and how do you think government is going to manage that?
In fact, for the next year, for FY22, in
Mhm.
fact, I don't think the fiscal deficit will be a problem. It is a problem for 21 because obviously that was a COVID year and government receipts were much lower. In fact, ironically, because the economy is going to bounce back, we saw IMF has estimated that India's economy will grow at 11%, which is the highest growth rate in the world. So even if you take economic growth, most people believe that real GDP growth for the next year for India will be 10 to 11%. And if you add 4 to 5% inflation, the nominal GDP growth is going to be 15-16%, which is a lot. Because if nothing else happens, government receipts will go by 15-16%. So government spending, government will have a lot of room. I think the fiscal deficit will be closer to 5.5 percentage points. Of course, the long-term target is to be at 3.5, or go under 3 also. That is what Indian government is committed. But I do think that that target of 3 and below will get postponed by a few years given the impact of COVID. And for FY22, when the finance minister presents the budget, we'll see 5.5% as a fiscal deficit, which I don't think will be unexpected. And I think government will not have a problem in raising resources for the next year. I think they might have problem in spending it because, as I said, if they spend it by giving money to the people, it's easier to spend. If they have to spend it by doing projects, government's own spending capacity is also limited. So government will not have a problem in the next year. I think on a long-term basis, also for the next 4 5 years, the privatization will be one big revenue source for the government, and I do believe that even on that, from what you hear government officials saying, the finance minister saying, I do believe that there is going to be a major disinvestment drive that will go on. And fortunately, with easy liquidity conditions and capital easily available, a lot of government assets or disinvestment will happen in the next 4 5 years. I do think the government should announce a disinvestment target from now to 2024, and they should say that we will raise 14 to 15 lakh crores by one big disinvestment drive in this years. And I think this is the best time. The global liquidity is ample, interest rates are low, people are looking for good quality assets. So government pushing disinvestment will be another major source of revenue in the coming years.
True. I was just going to come to the part on disinvestment that this year we managed to do only 18,000 crore, which is in fact one of the lowest in the last decade. How do you think the government is going to, go about the entire disinvestment process? Also, do you think that the government has been far more focused on trying to do M&A and strategic kind of sales than just going to the capital markets, because markets have been at their all-time high? Couldn't government have just gone ahead and done some share sale program and raised far more capital from the markets?
See, I think we should be more maybe empathetic to government. The government has had different priorities. I do believe until September, October, they were fighting COVID and COVID related issues and the crisis that was there. The markets have been good for the last 3 4 months. Obviously, October onwards, markets have really been on a rampage. Government disinvestment has a lead time. It takes government at least a few months to get things off the ground. There is, BPCL going on, Air India is going on. So there are some things out there. But I do believe you are right. Government should now take this opportunity and say, in a structured manner, in a strategic manner, can we over the next 4 5 years sell, say, 10 to 15 lakh crores worth of assets. I think LIC, the LIC IPO disinvestment is also going along. Yes, COVID did take the government's attention away to other important things in the middle of the crisis. And hence, I'm saying, and see, disinvestment is not a yearly thing because the market cycles are different. And hence, government should set up a 4 year program that between now to 2024, we will try and sell, maybe be ambitious and say 20 lakh crores, and then go out and sell assets aggressively, sell companies aggressively to meet that target.
True. There's one thing that I want to take away from this answer that you just gave around having a long term target of around 3 years, 4 years, and bringing that back to our conversation. There are these big elephants in the room at this point in time. One is what happens with the entire moratorium that has just closed, and everybody's been talking about the impact that will have, especially on the PSU books. Then there is bankruptcy code, which is just on hold right now. When does that come back to market? There is real estate, which saw really a sudden upswing, but again the numbers are moderating. There are way too many things that are happening. What do you think are the structural reforms in the long term that is needed in this country?
I think on the moratorium, because you asked a lot of questions in this, I think on the moratorium issue, I do think there'll be credit cost will go up. I think provisioning and credit cost for the banking sector will go up. I've always maintained that we should expect an additional 1 to 1.5% per year for the next 2 years as COVID-related, credit cost for the banks. I think most banks have raised equity; they're prepared for it. So as and when it happens, it won't be a surprise. Usually, I think markets and investors react to unpleasant, unexpected surprises. If they are already expected, then if they're a little bit here and there, I don't think people will really get impacted by that. So I don't think that's a big challenge. Yeah, some PSU banks may require more capital as a result of the additional provisioning they'll have to do because of COVID. But I think the markets are good. Last couple of months, we've seen a lot of PSU banks also being able to raise capital, equity markets, and also I think that will get compensated by capital raising in the equity market, as all the private banks have also done. On the other side, I think what was the other question you had? You had first was
In terms
on
of
the
what are
PSU.
the other larger structural reforms over the long
Yeah,
term?
on the I think on the real estate sector is doing well. Last 3 years, I think the new launches have been subdued, so a lot of inventory has got absorbed. And even out of COVID, I think the last 3 4 months on that have been really eye opening. I think real estate is doing very well, as is automobile and all. I think steel, cement, all those sectors are doing well, and that is where the fundamental rebound in the economy is being showcased. So I do believe that I think real estate has had a very bad about 5 to 6 years, but even that, I think reversal, the business cycle in the real estate market is also happening. I don't see prices going up in a hurry, but I do think sales and all have taken off. And with lower interest rate and mortgages and banks being very aggressive, yeah, a lot of this COVID-related impact will also have via banks being aggressive in giving home loans. And the reason for that is the best way to manage the impact cost of COVID provisioning is also to push on growth. And with this low interest rate, pushing growth very aggressively. And home loans are the best product for any bank. So I think we are seeing the lowest home loan rates ever, and that is also propelling home buying. Along with that, obviously, after COVID, people have realized that home is very important asset to have. So I think more and more people are buying homes, upgrading homes. So all of that is leading to real estate doing well. Along with that, automobiles and hand steel and cement and other sectors, consumer durables are all doing well. So I think the economy is on a rebound. There was a long-term downtrend from 2011-12. Then there was a credit-related downtrend which got accelerated after ILFS, and then COVID was like the final nail on the coffin. But we are seeing a reversal of three down cycles: the long-term down cycle from 2012 onwards, the medium-term down cycle from 2018 onwards, and the short-term down cycle of 2020. All three have got reversed at the same time, and that is why we are seeing this strong momentum in the economy. So I think reforms are required, but a lot of reforms are now required is by easing taxation like dividend tax and things like that, so capital efficiency can go up. I think more FDI in insurance and all that is required because more capital can come in, because that's one sector that can grow. I think we need some reforms in the credit markets and the bond markets and all of that, so that really the credit growth in India is driven not just through the banks, but along with the banks via the bond markets and the funds and all that. So we need some reforms, but I think the economy is on an uptake, and the government needs to just make sure that the right encouragement and the right incentives are given for the business growth to happen.
True. A lot of people have been talking about the introduction of LTCG taxes, etc. May come, and markets have been a little scary about the fact that what kind of taxes can come in, because the government obviously needs to shore up capital. What could be the bigger dampener in the coming
As I
budget?
said, government doesn't need to shore up more capital. I think they can do it via disinvestment, and the economic growth of nominal growth of 15 16% will give enough revenues to government for the next year. So for 2022, government doesn't need to introduce any new tax at all. I think that will be the best thing for the economy. Let people spend money, consume, invest for this year, because that will really drive economy. Not government trying to add one more tax and collecting 5,000 crores or 10,000 crores via that and trying to spend that. I think that is not the need of the hour in this year.
Sure. And what are your five, big expectations from the budget? Everybody has some expectation. What are five from your end, or top few from your end?
So I would say one is, as I said, streamlining of dividend tax, because I think now dividend it taxes the highest marginal tax level, which is too high, because dividend should ideally be tax free. The second will be, as I said, no new taxes. Third will be a big privatization announcement. Fourth will be cutting taxes for the salaried class, and maybe reduce the slabs, because those amounts are low. And I think just giving people a psychological feeling of having more disposable income will be a good thing. And the last one is increase FDI and make a lot of approvals and all, make it just very easy. We have to move away from an approval oriented economy to a market oriented economy.
True. And to have you on the show and not ask you about capital markets would be a sin. Markets have been at an all-time high. Do you think the inflows will continue, or do you think that markets have now it's hit its peak and that's why it's going to stay, or do you think it's going to come down?
See, markets are always going to be volatile, and markets will always be volatile. So in the short term, anything anybody says, uh, uh, you cannot predict the market in the short term. On a medium term basis, I think if the Indian economic growth is coming back, corporate earnings are going to come back. I do believe that because markets ultimately in the medium term react to economic growth and corporate earnings growth. I do believe that currently markets are pricing in a 12 to 13% corporate earnings growth for the next 4 5 years. I do think the Indian economy can deliver that, and if Indian economy delivers that, markets will keep on doing well. Along with that, structurally, I think there is emerging markets are making a big comeback. The US dollar is weakening and expected to weaken further, which is also giving a lot of flows into emerging markets, and India is one of the beneficiaries. Third is, I think, given the India's how India came out of COVID, I know a year ago, a lot of foreign investors worried that India will be the most hit because of COVID. Indian economy will completely get shattered because of COVID, because we don't have healthcare, we had a more stringent lockdown, all of that. Seeing that, lot of confidence and faith to the international investors in the Indian markets. And I think all equity markets are expensive everywhere. So when you look at Indian markets, you should look at in context of other markets also. I think Indian markets may be as expensive as other markets, but India growth now going forward for the next 4 5 years will be a lot more stronger than other markets.
True. I was just going to end the interview with this question that you have a lot of foreign investors in your company across your portfolio companies. I want to understand what has been the takeaway from your conversation with foreign investors. What are they saying about India and investing in India?
I think they all love India's growth. And as I said, after the post-COVID, one of the other thing has been that India's ability to grow, India's growth, momentum has been highlighted, has been underscored once again. So everybody is confident of that. So I think overall they will continue to invest in India. They want to be in the Indian market. They just find India not an easy place to work with. I mean, there are all this, our tax laws and our all this other administrative nitty gritty is what tires people out. So they want more the arbitrariness, they want more certainty. So I think India and foreign investors always have this, what I call very complex relationship. They love India's growth. They love India. They love the fact that we are a democracy. There is rule of law, all of that. But what they find it hard to handle is this constant complexity of India, the uncertainty of India, the constant kitch that goes on in India. And that can be very tiring for investors.
True. Thank you so much for your time today and hope you have a great day, sir. Take care.
Thank you, Pooja.